Today's question: to use or not to use a credit card? Most of you own at least one, and many are wallowing in the luxury of free hotel stays, sky miles, and cash back. Others believe that it's the worst thing they've ever owned. They feel trapped in a prison of debt, interest payments, and late fees. Check out the good, the bad, and the ugly right here on Windfall Wednesday. We review basic principles to help the everyday person improve their finances. So like, subscribe, and let's get to it. Credit cards. The little pieces of plastic we use to buy things without actually paying cash. At least not right away. Buy now, pay sometime in the future, and you're on your way. So what's good about these nifty little borrowing badges? Let's start with credit card rewards. For each dollar that transacts through your card, you'll likely receive 1 or more points. These points can be used to redeem a myriad of rewards and bonuses. Prime Day, right? Think of anything you can buy online, like literally just about anything. Gift cards to your favorite retailers, electronics, using your points as if they were cash to pay your card down, actually redeeming points for cash back. Typically 1 point would equal 1 cent. So 100 points for $1 cash back, dining at your favorite restaurants. Bonus categories that give you even more cash back per dollar transacted. Travel, hotels, airfare, so many things you could do with these points. And that's really the draw, isn't it? You'll also have more purchasing options over the phone, on the web, or in person. More importantly, perhaps, is that credit cards are typically more secure than traditional payment methods such as tendering physical checks or entering your checking account info on every site that you shop. If someone shady were to steal your information and gain access to your checking account, think of how quickly they could empty it. That would leave you waiting through the arduous task of the bank processing your fraud report and replacing the funds, if you're lucky. Now, if your credit card is stolen, you'll still have to wait for your card issue to clean up the fraud, but you won't be high and dry on cash while you wait through the process. You may also have purchase protection. Many moons ago, when I was moving into my college dorm, my fireproof safe was destroyed by a car. I was able to use this purchase protection benefit to replace the safe free of charge. And if you catch any billing errors on time, you can dispute them without paying for them and tying up your cash. Certain cards take it above and beyond, giving you benefits such as airport massages, credits for limousine service, and wine tasting discounts. Some even give you primary rental car insurance coverage, in which case you wouldn't even have to involve your personal policy. And most of you know that using your personal coverage could raise your rates. So why have some people absolutely sworn off credit cards? Like they refuse to even own one? I'll show you why. And I also have a special bonus tip for those of you who stay till the end of the video. But first, if you plan on using this content to grow your stacks of cash, subscribe, then hit the bell so you never miss a video. Also, if you know anyone who can use what we talk about on this channel, feel free to share this video with them. Here's the bad news, and by far the most dangerous thing about credit cards. Reverse compound interest. That's right, wealth destruction as opposed to wealth building. At the time of this recording, the average interest rate for a new credit card offers is 18.89%. In the US, the average credit card debt per adult is around $3,356, and per household is about $6,270, while the minimum payments can vary depending on the card. If you pay 2% of this balance every month at that interest rate, you'd end up paying $3,291 in interest alone, or almost double your original balance in total. It would also take you over 8 years to pay off your credit card, assuming you didn't charge anything else on it and your interest rate remained the same. Assuming the same 2% payment and same interest rate, the balance of the average household, which is $6,270, would cost you $6,149 in interest, and the same over 8 years to pay it off. Moreover, you're basically spending tomorrow's income today. And while living week to week may sound dismal, how about living week to next week? Or next month? Or worse? The surefire way to avoid interest payments completely is to pay off your balance every month. Not everyone struggles with this, but for many it's easier said than done. Around 29% of households pay at or around the minimum payments toward their credit cards. The bottom line here is, know thyself. How prone are you to overspend just because you have credit? Do you have trouble keeping track of dates and payments? Of course, one potential pitfall is that to know yourself, you have to learn yourself. And learning with credit cards can be extremely risky business. Now, even if you never carry a balance, you still have to be vigilant. Mind your payment due dates. Miss one payment, and you can not only be subject to late fees, but that one occurrence can tarnish your credit report for as long as 7 years. And if you use credit cards to pay bills, pay special attention to your credit limit. If you get careless, you may max out your card's limit and miss an important due date for a crucial payment. Credit cards also charge sellers a fee as high as 3.5% for each transaction. Depending on what you buy and where you buy it, the seller may pass that cost on to you. Now for that bonus tip I promised to those who've invested in themselves by staying with me to this point. You've heard the good, the bad, now here's the ugly. People generally tend to spend more money when they're not using cash. The average cash purchase in America is around $22, while the average purchase using a card is about $112. Apparently, even back when McDonald's first began to allow credit card payments, the company's average ticket price jumped up from $4.50 to $7. There is one workaround if you believe that you are susceptible to unwittingly spending more than you intended. That is, to only use a credit card for things that you pay for regularly. Think about automatically withdrawn monthly bills that wouldn't cost more to pay with card than they do with cash. You could simply set these bills to be taken from your credit card instead of from your checking account. Maybe you use it for fuel. But again, watch those pump prices, as sometimes they are more expensive for card users versus cash users. Of course, you'll still need to mind your credit limits and payment due dates for your credit card. If you have trouble with that, you may want to cut the plastic. So are credit cards right for you? 83% of Americans seem to think so, because that's how many of us own at least one. But really, it comes back down to that know thyself principle. Got any credit card tips or questions? Comment below, as your feedback helps me to improve this content. And if you feel that anyone can get value from this video, like, subscribe, and most importantly, share.